Hello, everybody. I can see a lot of people are just coming in the door as we speak, so I'll give it maybe another 30 seconds, and then we'll get going. Right, so yeah, we've got a pretty full house today. Welcome everybody to today's webinar on exploring growth opportunities in the payments industry in 2025. Thank you all for joining, and a special thanks as well to our panelists today, who I know to be lending a really valuable perspective on the topic. Before we dive in, I think probably a quick round of introductions are in order. Great to see a lot of familiar faces already on the line, but maybe we can just go around for those that maybe aren't familiar with us already, to give a quick intro to who we are and what we do. So Hannah, shall we start with you?
Thank you. Good afternoon, everyone. I'm Hana. I'm the CEO of Paynetics UK, which is a fintech platform providing embedded finance and embedded payments to businesses that want to launch these propositions in Europe and in UK. Kevin, maybe over to you.
Great. Thank you, Hannah. Good afternoon, everybody. And thanks, Shona, for inviting me to the webinar today. I'm a pretty experienced payments CEO, having led a number of payments businesses internationally, most recently an Australian listed payments business with large operations here in Europe and the US. My sweet spot really is in transforming challenged payments businesses, either into exits or onto growth platforms. And over the past 20 years have dealt with many regulatory and operating issues across payments businesses, mostly in issuing and processing, but have touched all aspects of payments. And at the moment, while I await the arrival of my next CEO role, hopefully I advise some fintechs and some private equity firms specifically on payment acquisition potentials.
Great, welcome Kevin and Jill.
Thanks so much, Shona, and thanks again also for having me. It's great to be here. So Jill Docherty, for those that don't know me, I've spent almost 2 decades in payments across 3 different continents. I've worked for large global brands like MasterCard and Visa, and then more recently in my career, I've worked for I've done some more entrepreneurial roles at smaller privately held fintechs, Neum and Nuve. My expertise is very much housed in issuing, and I'm really a go-to-market expert. That's where my sweet spot is. I've led a number of commercial teams, product and solutions teams, but ultimately I've always been customer facing, but ultimately really am able to drive material outcomes in terms of go-to-market propositions, use cases, and convert them into really compelling revenue generation opportunities. So that's just a bit about me.
Right, well, lovely to have you all. And just a quick bit about KAE for those of you that don't know us already. My name is Shona Sabah and I'm a senior manager. We are a prismatic intelligence consultancy, which essentially means we provide payments and technology companies with a 360-degree view of their customers, their competitors and their markets to de-risk and streamline some of their decision making. And growth really is such an underlying topic in a lot of the work that we do, whether we're helping, product leaders or marketing leaders or strategists, ultimately they're trying to achieve growth for their business. And it's, always coming up in conversation, where is growth going to come from next for us and how can we seize that effectively? So we thought, we'll bring everyone together onto a webinar and we'll look at that topic together from multiple different perspectives. And, really, really happy that you could join us all today. There will be an opportunity for a Q&A towards the end of the session. So do feel free to put your questions as we go along into the Q&A box, and we'll get to as many of them as we can towards the end. It's obviously a very ambitious topic, but we'll cover it as best as we can within the next hour. So when we say growth, obviously, that can mean different things to different people. And we wanted to frame today's conversation really around three main pillars of growth. So the first pillar is going to be around customer acquisition. So how can you grow within your existing markets where you're already potentially winning or already growing? We'll also look at it from a market expansion perspective. So how do you take your proposition and your organization internationally? And thirdly, we'll be thinking about growth from a verticalization perspective. So big hot topic is how do we actually penetrate new industry verticals effectively, which can obviously be a really difficult thing to do. So we'll be looking at all these three different areas of growth and hopefully also giving a perspective on how you can effectively evaluate and prioritize some of the growth opportunities that you might be considering. So to make it a little bit more practical where we can. Now, it's great to see that we've got a really diverse audience on the line today. And I know that some of you may be coming at this conversation more from a commercial payments perspective or a consumer payments perspective. So before we get into it, I think it would be maybe nice just to pause. And I'd like to ask you, Jill, how do you think the growth conversation changes slightly, whether someone's thinking about this from a consumer payments perspective or from a commercial payments perspective?
Sure, thanks, Shona. So I think what I've seen, and certainly the trends and kind of the overarching movement that I've seen in the last couple of years is I've seen a lot of a pivot away from kind of consumer payments because of the total economic situation, or economics, should I say, of consumer payments. So if we think about consumer payments and we think about them in the context of Europe and the UK, there really are, capped product economics within those consumer payments. We have capped interchange, but on the backdrop of that, there is a lot of regulatory requirements, and rightly so, right? Consumer payments need to be secure, they need to be reliable, consumers need to be able to trust them. But it becomes increasingly hard to really generate material revenue if you're just looking at kind of debit, prepaid, and P2P type payments, and you're not considering lending or any other type of payments that would be income generation in terms of net interest income. So I think what I've seen and what I'm observing is this slight pivot away from consumer payments as a whole, or what we traditionally just saw as EMIs coming into the marketplace in Europe and the UK, and believing that they could successfully manage and launch a consumer program that didn't have any kind of a lending or saving capability. It really was just a set of payments that was really domestically oriented in the debit, prepaid, and P2P space. Those type of programs will really struggle from an economic standpoint, given that you have restricted or limited revenue, and you have a very high benchmark in terms of the regulatory framework that needs to be upheld. So I'm seeing, kind of from my experience, more growth coming out of B2B payments, where there is the optionality to increase the product economics. We do know within the UK and Europe that interchange remains uncapped for many of those products within the small business and larger B2B commercial kind of verticals. And whilst the regulatory framework is fairly similar in terms of PSD2 and then obviously leading into 3, I think that creates more fundamental growth opportunities. And I do think also there is a large segment of the market within B2B payments that's still relatively underserved, or that kind of value chain is quite fragmented. You know, I have to use one provider for cross-border real-time payments, but then I'll use another provider for, you know, commercial virtual card payments. So I think it's quite a fragmented ecosystem, but I do think there's material growth that we're seeing in a lot of different use cases and propositions that are more oriented to B2B, because the market economics and the product economics are just more enhanced than what we currently are faced with in consumer payments. So I'll pause there, but I value obviously the inputs from my colleagues.
I would very much second that this is what we see in the market. So of course, we talk to many companies that are coming to market or are established platforms, and they are trying to launch these new propositions. And vast majority of the growth is coming from the B2B space. And it's in particular focused on the small and medium enterprises, which probably are still a segment that is somewhat underserved by the existing providers. It's also very fragmented. I've seen some stats that in Europe, an average SME has at least 3 different providers of various payment services to them. So there is a huge opportunity. And I think the businesses that are attacking this space have also had a chance to see the success of the likes of Shopify or Toast in the US, where the numbers show that about 90% of their profitability is coming from payments. It's not coming from their traditional kind of platform business, but it is actually monetizing the platform business and the customer base by adding these payments, embedded financial services. And so very much agree with Jill that probably 80% of our conversations are about are in the B2B space. And the only 2 areas in the B2C space where we see some still movement is, of course, cryptocurrencies and potentially blockchain. And the second one is cross-border payments, because again, the economics there are still quite positive.
I can feel a second webinar coming on just on those 2 topics alone then. Okay, great. And Kevin, did you have anything to add as well?
Yeah, maybe just Jill answered very comprehensively. Just to pick up one point around the regulatory side and the costs of achieving regulatory compliance. And certainly my experience over the last few years is that cost continues to increase. And it's on the consumer side specifically. It will potentially be a market advantage to players who can do it effectively and efficiently, but actually I think it's quite expensive and quite difficult to pull off. And so to your question around B2B versus B2C, I think B2B is the opportunity. B2C is very challenged, and it's also hard to get a really compelling standout proposition in that space. So I think we will touch on regulatory a few times over the course of this conversation. And when you're thinking about the product economics and dynamics and what you can charge and what you can accrue in fees, a lot of it is going to get eaten up on the regulatory side for consumer.
Great, thank you. Fantastic. Well, I think that's really super helpful context to get the conversation going. Let's then turn to our first pillar of growth that we wanted to explore today, which is that customer acquisition in your existing markets piece. And clearly, I think that we'll have a lot of people on the line today that are thinking about how can they maximize their potential with the markets or the customers that they already serve, and to indeed acquire new customers as well. So I guess my first question here is, how do you think the approach to customer acquisition is evolving, and what are the biggest strategic considerations right now when you're trying to acquire new customers as a company, as a payments company? And Jill, if we take that to you first.
I think what I've seen, again, just kind of strategic changes as fintech has evolved, and kind of some of the metrics and the KPIs around profitability have evolved. Certainly in the early years, when I think back to my time at Visa, I sort of saw a lot of fintechs looking to acquire customers at any cost. So the rhetoric was really about building a customer base and then figuring out how we monetize or create profitability from that. I think that there's been an evolution or a pivot of that model. And I think with more targeted tools, customer acquisition, like acquiring customers at any cost, is probably not like something that is being really applauded by currently by VC and PE firms. I think there's more thoughtful and more measured and more meaningful customer acquisition programs using a lot of tools, including AI. But I think the whole notion of acquiring a customer at any cost is potentially not something that we're going to see going forward. And profitability, I think, for any fintech remains front and center in terms of how am I going to acquire this customer and make this customer profitable throughout the contract term. So I think it is more targeted. I think it is more measured, and it's more focused on like profitability and using and enhancing inbound and outbound tools, and whether it's AI or whether it's other kind of customer acquisition tools. I think that kind of targeted approach versus the shotgun, like just acquire as many customers as possible and then we'll figure out who becomes profitable. I think that is what I'm seeing. And also what I've seen as well is understanding from the existing customer base, what does your ideal customer profile look like? And then looking at ways to acquire more of those customers. So I think a lot of work's being done on the existing customer profile, which then is being pushed into how do we acquire similar types of customers from a profile point of view, and what's the most attractive way and cost-effective way to acquire those customers.
So be
Yeah, maybe
picky.
Jill. Oh, sorry, Sean. I was going to build on Jill's comment, and Jill mentioned PE and VC, and there's probably a different webinar at some point around their impact for good or not on the payments industry over the last 10 years. I think the drive for just pure acquisition without the focus on profitability, those days are well gone, and that's correct. In advising fintechs at the moment, frequently when they're owned by PE and VC, there is a push for either international expansion or new segments or new verticals. And what I'm trying to encourage them to do frequently is actually focus on the core, focus on the existing customers that they have already acquired, and they do more with those customers, because you generally can, and then acquiring more of the similar type customers rather than suddenly thinking that they can expand out well beyond their core area. So for me, a theme that's in my work in terms of engaging with fintechs, it's around where are you really good, what products and propositions are you really good at, and how do you sell into those, and to focus and dive really deeply on those rather than be expanding too far away from your core base.
Would completely agree with that. We have also utmost focused on existing customers and trying to upsell more to them, just because it takes, in our space, we are regulated, it takes anywhere between 3 to 6 or 9 months even to onboard new customers, and therefore focusing on existing customers is the shortest time to revenue. And then secondly, then when we look at the new customers and we try to kind of see which segments, where are the ideal customer profiles, there is a balancing act between, again, going of course for the bigger brands that have the path to revenue is clear, but also they move slower, and therefore there is that balancing act where you need to kind of be filling the onboarding pipe with new partners, but also aiming for the big ones, because once they launch, the ramp up is typically much faster.
Yeah, interesting. And so Hana, how do you think payment companies should be thinking about some of this differentiation and speed to revenue when they're trying to acquire new customers? Do you have any steer on that?
B2B, we talk about the fact that the B2B space and the commercial payments is a hugely growing area, but it's also a huge area with many different segments. So here the key is to really be clear about which segments where your capabilities are, and which segments you have credentials in, so that you can move faster. As I said, like, there is so much market opportunity in the B2B space. By specializing, you can attract customers easier, but also you can then onboard them easier, faster, and therefore the path to profitability is easier as well.
Yeah.
So that would be my biggest advice, is try to focus on 2 or 3 segments where you play and do it really well.
Yeah. So
Expanding elsewhere.
yeah, and I think this idea of being very selective with who your segments are and why you want to acquire that segment, for example, from a profitability perspective, or product market fit perspective, I think that's something that seems to be coming through from all of you as you've been speaking. I guess the other part to this is, and I think this was touched upon, is building long-term value with customers once you acquire them as well. So where do you feel like businesses can sometimes go wrong when it comes to creating long-term value with customers and increasing their lifetime value? I'll put this to you, Jill, I think.
I mean, I wouldn't say they go wrong. I think it's hard, right? Like, it's not easy attributing growth out of existing customers. But from my experience, it's the depth of the partnership. Like, you've simply got to understand the customer needs and pain points to be able to upsell and cross-sell. And if I think back to some of the customer success roles that I've done, like, we've got super deep in terms of trying to understand and articulate what the customer pain points are, and then doing like a heat map to understand, what are the products and services they're consuming today, and then understanding their priorities and their pain points. What can we cross-sell and upsell? Otherwise, you're just going on with kind of a laundry list and you like ticking it off. And that's not, for me, really a consultative sale. So I think it's really getting deep. And if I think back, like, to some of the customers at NEOM, like, that was one of the first things we did, right? We actually had to go through the tedious exercise of actually doing account plans. And it sounds like, a very tedious thing of making people fill in, some templates about their customer and their priority and what business, you're doing with them today, what's the revenue contribution. But it allows you to really deeply harness, like, what you've got today and then what the possibilities for that cross-sell. Otherwise, I think it can become a very fruitless exercise that just, leads to, well, I don't need that, I'm getting that from someone else. So it's that age-old thing of, like, know thy customer. And I think, like, I'm a bit of a stickler about, like, this whole customer immersion. And I think my old teams used to get, like, roll their eyes at me when I used to kind of get on my soapbox and kind of go on about it. But unless you can deeply immerse yourself into what the customer is trying to solve for, and what their key pain points, or how are they selecting partners? Is it price? Is it performance? Like, is it that they can't service those corridors or those payments themselves? Or, like, why do they need you? And then really figuring out, like, how you can then help them with alternatives in terms of other value-added services or other corridors and currencies, if it's cross-border payments, or what it is that you need to do. But I think you've really got to have a really strong customer success function, and you've got to have very curious individuals that really want to understand the customer's business and get into kind of understanding how you're going to do this. Otherwise, I think it's just going to be a very, as I said, fruitless exercise.
And maybe if I add to that, I think when we see the fintech businesses now start to mature, because we're starting to move into that phase of the industry, we'll see maybe much more focus, and I'm agreeing with Jill strongly, on customer success, not retention, because you can retain customers but not do much with them, but actually be really successful with your customers. So one of my recent portfolio companies had 160 customers, B2B customers, out of a total market of about 350. And they came to me and they wanted to put all their focus on, we want to go from 160 to 200, 250. And actually the challenge back from where we ended up was, well, can we do just an awful lot more with the 160? Because actually in many cases we're only selling one service to them. And Jill nailed it there, where you say you have to spend time and understand their business and what they're trying to do and what they're trying to achieve. It's not about selling, well, we've got 9 products, we're going to sell it off the list. It's actually about embedding yourself and understanding what it is they're trying to do and achieve, and then see where you can add services to them. And so to me, as we see the industry evolve, we will see customer success functions being really where the incremental extra revenue will come out. Of course, new customer acquisition is always going to be important, but also the industry we're in, the lead time to putting on new customers, as we know, is very long. Sometimes it can be greater than a year. So when you're looking at a 3-year plan and you're looking to increment revenue significantly, if you have an existing body of customers, that's where you've got to go to first. And I think, it's as old as the hills, but, getting revenue out of an existing customer by supplying good quality services deepens the relationship, deepens the retention, and, to replicate that with a new customer could take you 5 years. So I think Jill nailed it absolutely.
Absolutely.
I would add to that, I have seen many, especially the smaller, fintech companies, they are tech first, and then they have some sort of sales team running around trying to get new customers. And I often see that the customer success is far more technical focused than actually that upselling and the commercial focus or the people that are in that team. And so for the leaders of these companies, it's really important to think about, if you're incentivizing your salespeople for new sales, you need to be equally or even more incentivizing your account managers and your customer success for that upsell. And often you see that this is not the case in some of the fintech companies that we speak with.
Yeah, and I love this really sort of customer first approach to growing those existing relationships and those existing accounts you have. I think that point that you made earlier, Jill, around the sort of pain points analysis, then that's absolutely true. And I think from what I've seen in the industry as well, is actually not just identifying the pain points, but also which of these are having the biggest impact on their propensity to switch providers. What would kind of form the most compelling part of a new value proposition that might tempt them away, so that you're really linking those pain points right to the drivers of choice of that switching behavior to kind of drive those commercial outcomes for you.
It's so true, Shona, just to build on that. So when I was at MasterCard, I led globally the HSBC partnership. And in the early days of a lot of the high street UK banks moving to a self-service model to reduce some of their cost of servicing, HSBC came to us and said that every call to their call center cost them £25. And they'd done some analysis in terms of those calls, and 80% of them were about a card loss, like either the card had been lost or stolen, or the card couldn't be found. So we actually didn't start selling In Control back in the day as an in-app provisioned product. We actually sold it as a cost reduction to help the COO of the business, not the cards team, not the payments team, but the COO of the business, meet some of his KPIs in terms of number of inbound calls and the cost related to those inbound calls. So if we hadn't understood back in the day, Andy, as the CEO of HSBC's requirement to meet some of the KPIs in terms of cost reduction, we wouldn't have actually had a success of selling In Control, which was obviously an at that time a hosted, but now API solution that the bank could very neatly put into the mobile banking app, which really allows the customer to, obviously freeze and unfreeze the card. So we didn't sell it on the basis that it provided that. We sold it on the basis that we're going to stop people calling your call center, because that was the bank's priority and pain point. It wasn't actually about offering that feature in the mobile banking app. So again, like same product, completely same product, same outcome. But if we'd gone in a consultative sales methodology and sold it as a function within the mobile banking app versus a cost reduction exercise, I don't think we would have had the success. So again, it's really about like immerse yourself in that customer, read their earnings, read all of their papers they're writing, understand if they're a large, UK high street bank, what are they committing to the investors in terms of their key priorities, and then try and help them deliver on those, because then you're going to get a better adoption than just going in with like, oh, we've got all of these new sexy things, do you want to take one? And I'm being obtuse, right? Like, that's not how salespeople go in. But I think like you've really got to understand what you are selling into.
Yeah, and know that not all pain points are created equal, and sometimes it's the impact of the pain point more than the pain point itself, which is the switching factor. Yeah. Okay, brilliant. This has been super interesting so far. I think let's move on to our next pillar now, which is around market expansion. So for companies that are looking to grow through taking their proposition internationally, I think we all know that it is quite, it can be quite fraught with pitfalls. It's obviously quite complex in terms of trying to enter into new different customer dynamics, trying to grapple with market regulation, and even just all the operational complexities that come with going internationally. But clearly it's high on the agenda for a lot of payment companies right now, and we see a lot of announcements about market expansion in the industry being made. So I guess my first question on this topic in particular is, what do you think are the most important factors that payment company needs to be thinking about when they are expanding and trying to grow internationally? And I'll hand this first question over to you, Kevin.
Yeah, great. Maybe a couple of thoughts on that, Shona. So I've been around the block on quite a few international expansions for payments businesses, either that I've been advising on or I've been involved in. And I've got to the space where I think the successful market entry utilizes partnerships and potentially even acquisitions in the target markets. Markets are so different, even across Europe, in terms of dynamics, regulatory requirements, the competitors, just the customer propositions. Entering a new market cold is very difficult. I've seen and been involved in a number of cases where we just were not successful, and notwithstanding all the desk research and preparatory work we had done first. But I've also seen scenarios where we've been successful and they've arisen from actually partnering with successful entities in those markets. So a recent business I was involved in partnered in the Scandinavian market for the sale and distribution of gift and incentive cards. And it was really successful because we managed to come out of the UK and partner with a local entity who knew the market extremely well. The products and proposition set matched neatly, and that gave us an entry point. And yes, we were giving away some of the margin and the revenue pool, but actually we were learning all the time and growing our experience in that market. So for me, that's the most compelling piece, because everything is different. And you may think, well, it's, even sitting here in the UK, and I'm originally from Ireland, and people would say, well, the Irish and the UK market, they're very similar. They are, but they're also very different. And so then you add in language and international dynamics, it can become very tricky. So for me, it's around partnerships and or possibly local acquisitions that buys in and gets you the local information that you need to then build out over a period of time.
And to build on that also, the regulation is very different, and therefore you need the local partners who understand that, or who have the integrations with the local credit bureaus or the local digital ID providers and so on. So that's one consideration, that if you are launching, I think now the fintech scene is very much far more kind of focused on profitability and not on this kind of mad expansion around the world. I do remember years ago when I was in Visa, one of Visa strategic partners was Klarna, who had peak valuation of $45 billion. And of course, they raised it on the back of global kind of strategy going into tens and tens and tens of markets within a few years. Of course, then the pullback happened, and then they very much focused on, well, let's focus on profitability. Let's focus on really doing those few markets where they were well, and let's focus on the bigger ones. And in the bigger ones, of course, then they are looking at local partners, how to get it right, as opposed to having just taken them on the map that Klarna is in whatever 50, 60 countries.
And I think you've touched on one interesting point, and some of the payment companies who are operating, say, pan-European licenses, notwithstanding they may be passporting in from, Ireland or France, actual local regulations can be different as well. So while you may have a license that allows you offer products and services across Europe, excluding the UK, that doesn't mean it's homogenous. It's far from it.
Yeah. And on your point, it's even it's not only the regulation, but also the local customers.
Yes.
So even if you are offering euro accounts and therefore you have a license and you can offer euro accounts in the whole Europe, the local customers don't want to have an account, let's say France. They don't want to have, if they are sending money to an account that's, let's say, in Ireland, all of a sudden they got spooked because they think they will be paying cross-border charges, or they don't know what it is because they think that business I'm sending money to is in France. Why do they have an Irish IBAN? And so it's not only the regulation, but also the customer expectations.
Yeah.
Now there's so much fraud going on. Customers just need to be assured that whatever the proposition they are interfacing with, that it's really valid, it's trustworthy, and they also trust the local players.
Yeah, absolutely. Jill, did you have anything else to add to that?
No, I don't actually. I'm lost for words, which doesn't happen often. But I completely agree. I just think it's so multifaceted, right? I remember when worked with Revolut when I was at Visa, and the proposition is really compelling for the UK and Europe. But there are different market variables in, for example, the US, where a high proportion of the population doesn't travel outside of the US, and therefore they don't necessarily need a consumer FX wallet. So I think it's everything that Hannah and Kevin has said, right? Like, just success in one market doesn't necessarily mean that you can just lift and shift somewhere else, if only payments were that easy.
Yeah, absolutely. So with this then, kind of what would you say are the best approach for thinking about those local customer needs when going internationally? And then should we go with you? Sort of what would be kind of your approach if you're thinking about sort of trying to understand those customer dynamics and how they might vary?
Is that for me? Sorry, I misheard.
Hannah, but I'm happy for
Hannah,
anyone
you
to
wanna-
take it. I'm sure you've
Hannah,
all got a
you take it.
perspective.
I think I would really stick to your core proposition and then explore how to make it work in another market. Of course, you need to look at similar markets, similar dynamics, and so on, and leverage those partnerships to be successful. And as I said, the payments, we are so lucky because we operate in this market that is growing fast and it's so fragmented. It is, I think there's just so many opportunities to expand, and so we can be quite picky in where to go and where to invest.
I think there is something as well for payment companies that are driven by either PE or VC. They frequently want rapid expansion. They want X number of countries on the expansion list. My challenge is always back, well, I'd rather be successful in 1 or 2 rather than have some kind of a footprint in 10. And I think the leadership of the businesses just needs to be really clear about, if you're going into one of these new markets, can you be successful? And investing the time and energy in it. And that again is back to partnerships as an easier way. Part of the challenge for us is because there's so many opportunities in the market, you've got to be really strict and disciplined about what you're chasing after.
Are there any sort of trade-offs that you need to make if you're thinking about sort of going it alone or kind of expanding through partnerships with more local players? What are some of the trade-offs that you might want to consider with that? And Hannah, I think you'd be well placed to answer that.
Thank you. I think it also has changed since the 10 years I've been in the payments industry. It has changed. I think in the past, maybe even 5 years ago, we have seen these big fintechs, the likes of Revolut, Klarna. They were very much, it was all about being in control, and they had the teams and the scale to be building things in-house. And of course, they are, really good technically, and so they could do these propositions, but it still took them some time and huge amounts of resources. Now I see in the market, it's even within the last 2 years, I've seen a shift of these large digital platforms that now want to go into embedded finance or into embedded payments. They are actually looking at providers like us to provide more and more of the infrastructure and white label solutions and so on. Now it's for them, even though the opportunity for them is immense, and in theory, on paper, it would make sense to build everything in-house and be completely in control and have, not maybe the cost structure would be kind of more favorable for them. But we do see that they also want to be quick time to market, and they want to do almost like, well, let's try this project. Let's partner with, with the processors and with the EMIs first, just to test it, and then if that works, then we will expand. So we have seen in the last 2 years, it's now more and more they want these prepackaged solutions, which was not the case maybe 5-6 years ago.
Yeah, almost they can kind of dip their toe in the water a little bit to sort of test the waters before sort of doing that,
It's also typically a cheaper way of doing it than having large development teams building things for 12 or 15 months and then find it's not quite what the market operates, whereas a partnership can be up and running pretty quickly. The cost to get there is not necessarily anywhere as significant, and you can test and learn quickly, and if you have to back out, it's not a massive written off cost either.
Yeah, absolutely. All right then. So aware of time, we're going to move on to vertical expansion as a growth opportunity in just a moment. But was there anything else we think about market expansion that hasn't been said so far that's really important to bear in mind? Again, I feel like any of these could be a webinar in themselves, right? It's absolutely fascinating. So, okay, let's move on to the vertical expansion piece then. So this is, again, thinking about where you, and I think this is probably most applicable to commercial or B2B payment businesses, but where you've been successful in one industry, and you want to start expanding into new industry verticals. I know, for example, with the work that we've done with virtual card issuers, maybe they, start out in travel payments and then they think, okay, how can we crack healthcare, or how can we crack construction effectively? And what does that look like if that's how we want to grow? So I guess my first question really is around sort of what is your sort of general impression around growth through vertical expansion? How should that be approached by payment companies as part of their growth strategy? Because we know it's not really a very straightforward thing to do, right? So yeah, Kevin, I'll pass it on to you first maybe and see what everyone else thinks.
Yeah, and maybe because of the role I've played typically in businesses as CEO or advising, my role is frequently to challenge cases that are put in front of me. And what I like to see in terms of expansion is expansion that's close to the core that we focus on and that we're good at, rather than jumping to a completely new industry or a completely new product or a completely new market. That might just be years of experience telling me that it's hard when you jump to a new market or new industry. And so the more you can deepen your core, and then also if you are expand in close adjacencies rather than taking a jump from, for example, healthcare to travel. Because every industry, like we talked about, every market earlier has individual dynamics. Every industry has individual dynamics, and not every product will stretch across industry. So I'm frequently challenging on it. And I think this is where, if you do decide that you want to move across, again, working with expert partners in those sectors would be the right way to start.
I completely agree, Shona. Like, I think I've seen some, unfortunately, I've seen some situations where, a consumer product proposition or MVP has been built, and then the thinking is, well, let's just, take that into a new vertical, predominantly B2B, and that vertical has very clear product requirements. It also may be that even the product itself is completely different. In the consumer world, we see a lot more prevalence of a physical credential, where in the B2B world, if we're thinking about cards, it's normally a virtual credential. And the way in which that credential has to be generated through obviously a set of APIs is very different perhaps than the consumer world. So I think I would, to Kevin's point, tread with caution. And if you can articulate what the product and the proposition needs to look like, I would then, if you know the fintech is committed to going there, I would think about M&A. Because if I cast my mind back to Neum, they were very focused on cross-border real-time payments. They built a set of solutions. They had a very robust set of customers, but they acquired a company called Exaris, which had a pre-existing product, operational team, management team that basically was able to allow them to springboard into a new vertical very, very successfully. They have over time built efficiencies in terms of the tech stack and the architecture, but I think had they not made that investment and they tried to either build it in-house or take what they had in the consumer space at the time and kind of orientate it to B2B, I'm not sure they would have seen the same success.
Yeah, I can see you nodding along, Hannah.
Not much to add other than it's often when you go into new verticals, even though the product may be similar, you also need to think about the proposition, which is also the internal processes to service that vertical. And again, maybe different in non-regulated services, but in regulated services, that jump, maybe the organization may not be ready for the jump. And therefore, you can equally, you know, the customers the new partners, the new vendors can get stuck in the onboarding, compliance, and endless reviews, risk management, because it just takes time until the organization fine-tunes for the new vertical. So I would also add that if you are jumping to new verticals, it's not only the product, but it's also the whole wrapper around it that, and can your organization deal with it?
Yeah, absolutely. I think in our experience where we've worked on these kinds of projects as well, it can also be the distribution model. So, for example, it might be that in certain industries, you've got kind of group purchasing organizations, or you've got different purchasing structures. So actually how you even like sort of from a commercial perspective go to market, how your sales team has to sell it, or you know whose doors you have to knock on are all going to be very different as well, right? So it's very, very multifaceted from so many different perspectives. Great. I'm aware of time, and I know that we wanted to make sure we leave enough for Q&A. I think we had allocated the last 10 minutes of today's discussion to a group Q&A, so feel free to keep them coming in. I can see we've got a few questions coming through already, which is great. And just before we get to that, though, let's just wrap up the main portion of the conversation now with maybe a discussion around prioritization, because we've talked here about different ways of thinking about growth, you know, from customer acquisition, market expansion, and vertical expansion perspective. And it's been a really rich conversation. But let's take it back a step and have a think about if you were, again, a payment company now at the beginning of the year, it's the beginning of 2025, there are different ways that you could think about growth. How would you go about identifying and prioritizing what would be the right course of action for you as a payments business? And I know I've got a lot of my own ideas on this already, but let me just throw that out there and see if we've got any sort of snippets of wisdom and advice on that.
Maybe if you're happy, I'll kick off, and that's just really picking up some of the themes from the earlier part of the conversation. For me, it's around focus. It's around the drive to revenue. And frequently that comes from deepening relationships with existing customers, particularly when you're operating in the B2B space with such large onboarding times and then ramp up times. And it's around staying really close to what you're exceptionally good at. When I think about plans that I've been involved in for the past couple of years, when we do the 3-year plan, it's really year 1 and year 2 that matters. And when you're driving for revenue, it's around then staying with what you're good at for your core customers and deepening with those, and moving slowly into adjacencies rather than taking wild jumps. Maybe that's too conservative, but that's what works for me.
All views welcome, Kevin. Anything more daring?
I'm kind of the same, right? Like, I think what I've observed is I think we can get distracted as kind of, payment experts in doing a lot of things, and none of them particularly well. Whereas it's not as sexy, right? To say I'm going to do 3 things and I'm going to do them really well. And I think that is probably what I would always think about is in your revenue, how can I move it? Because, everyone said how long um, the sales kind of implementation plan is when you're taking on a new customer. So in your revenue, prioritization, do 1 or 2 things, make some big bets, instead of doing, 10 to 15 small things that you don't really do well and they don't really move the needle. And then kind of know thy customer, because I just don't think there's any other way, really.
That I don't have much to add, and I think maybe we should go to the Q&A if we have only 10 minutes left.
Yeah, absolutely. All right then. So let's get to it. Like I said, we've got a few questions that have come through already. I think one of the main ones that sort of a theme that seems to be emerging here is around AI. I think obviously it's 2025, so we obviously would be remiss not to talk about AI and the role that it is playing in driving the next wave of growth in payments. So I guess the kind of consolidating some of these questions together for you panelists would be, where would you be placing your bets right now in terms of AI driving growth within the payments industry? Where do you think that the most value is going to be unlocked over the next 12 months or so?
Good. Well, I'll give
I'll
you a
give
slightly
that to
different answer to your question, Shona, and I've been involved in a few conversations on this. So clearly, AI is going to be hugely powerful, and I don't think we really know yet what it can do or the scale. If I was sitting running a business at the moment, my challenge to the team for the next 12 months would be, where can AI help me take costs out of my business?
Yep.
And that's the focus for the next period of time while we watch and see where it will help us either sell new products or enhance new products. But I certainly think that there's an opportunity to take some more of the mundane cost and the routine cost out of the business, assuming that the cost dynamics work. And that's where I would be focusing, at least for the next 6 to 12 months.
We have a similar approach, and just today I was at an event where, funnily enough, this was also the top topic. And the quote was that AI is having the mobile phone moment. When Apple launched the first smartphone, everyone was kind of quite excited, but no one could envision how far the smartphones would have been ingrained in our day life. The fact that you'd be spending on average 6 hours a day on it was completely incomprehensible back in, was it 2006 or 7 when the first iPhone launched, right? So AI is the same. So of course, now we can see only the first step, which is we can be more productive as a business. We can lower the fraud if we have better tools and whatnot. But the remaining 90% of the value is probably still to be seen where that's going to be.
Right. And Jill, did you have a perspective on that as well to share?
I think like it is a buzzword, right? Like I'm not going to kind of disagree with what anyone said. It feels like AI solves everything right now. And to be honest, machine learning's actually been around in payments for quite a while. If you think about transactional monitoring, I mean, you basically were teaching a machine was learning how to spot, nuances in transactional behavior. It maybe wasn't as advanced and was more rule oriented, but if we really are honest with ourselves, machine learning is not a new concept necessarily. Maybe not to the magnitude of what we believe it's capable of, but we were using it for many years at MasterCard and Visa in terms of transactional screening and managing kind of that on a day-to-day basis. I agree with Kevin. I think you start kind of in-house. Look at how AI can help some of your your inbound servicing channels, how people can access documentation more swiftly, to be able to improve customer resolution on tickets or time on tickets in terms of response times. And that's what I've seen in the organizations that I've been part of for the last couple of years. I don't think anyone's really figured out how it's going to be applied beyond that. But I'm sure it's got multiple applications, but it does feel like it's a little bit of a buzzword at the minute.
Yeah, absolutely. I think I've been my perspective on that is I've been seeing some really interesting applications, particularly in the AP and AR automation space, actually. So not just necessarily in how it's being applied to the payment in terms of the transaction, but if you look at the sort of the end-to-end workflow of accounts payable and accounts receivable, and the amount of sort of pain points that arise through that sort of end-to-end workflow, I think it's great to see. I think a lot of technology companies actually utilizing AI to say, right, this is a pain point, and this is how we can solve for it. And I think going forwards, kind of taking the conversation back to that customer centricity that we were talking about at the beginning, I think AI will be good if it can solve for something, right? So it's an expensive investment for any company. So be clear about what it is that you're using it to solve for, and make sure that those pain points that you're solving for actually are going to drive commercial outcomes in terms of customers either wanting to kind of becoming more sticky with you, or the way that you can kind of use that to create new upsell, cross-sell opportunities and a better kind of end-to-end experience with them. So I think that's where I'm seeing a lot of very interesting applications right now as well. Let's go on to the last question as well. So I've seen a few in here about embedded finance. So I think again, embedded finance is a big topic at the moment, and there's a few. Again, if we kind of amalgamate these into one, what do you see as kind of being the role of embedded finance in the growth of the payments industry in 2025 and beyond?
I'm happy to take that one. So again, it's one of those buzzwords that have been around for some time, but we believe now it's kind of really starting to happen. And it's also maybe because it has been around for some time, there's more and more fintechs now entering, and companies like ourselves entering this space to provide those services more cheaply, more quickly, right? More kind of with better UX and so on. I think we will see now. I think every segment has seen by now, and you look at the different verticals in the B2B space, every segment now has one or two kind of North Stars that have done it very well. And I think there will be now the snowball effect of other platforms in the same segment saying, oh, those, my competitors have done it, we should do it as well. Just to give you an example, one of our partners, Trading212, they are a trading, mobile first trading company providing various kind of investment and trading services to B2C. They have launched a card which has been really, really successful, and now the more kind of traditional investment houses are all kind of taking notice and saying, well, if Trading212 has launched it and has been really successful, we need to consider it as well. So I'm kind of now seeing the embedded finance is really starting to move, and it's starting to happen.
Great, fantastic. Anyone want to add anything to that on embedded finance before we wrap up?
No, just a one comment from me. I frequently think that these concepts are in the industry for quite a while, and everybody's expecting them to do, and they take a while, and then suddenly they take off. And I think about contactless. Contactless was around for a long time, and people were expecting it to take off and take off and take off, and then eventually it did, and when it did, it was stellar. And I think embedded finance is in that space as well as a number of other concepts. So it will take time, but once the use cases come through and the customer propositions are strong, then it will get enough traction.
All right, well, I think, folks, that's all we've got time for today. I'm really sorry we couldn't get through all of the questions, but do feel free to reach out after the webinar to any of us if there was anything that you wanted to follow up with or pick our brains on. Of course, feel free to follow us at KAE. We have some more content in the pipeline, including some super interesting webinars coming up. So yeah, feel free to follow us if you're not already. And of course, this webinar will be available on demand. So if you have any colleagues or friends who you think would benefit from some of the insights that we've shared today, that will be available, and feel free to share it around. But yeah, thank you again, everybody, for joining. And again, a very special thanks to our panelists for the very rich and well-considered perspective that you've been sharing today. And yeah, thank you very much. Have a good day, everyone.
Thank you very much.
Thank you so much. Thanks.
Bye.